Well, here it is. We're actually on time. Amazing. Hi, I'm Anthony Parent, host of IRS Medic. I want to thank everyone for joining us today. So, this is the topic we have: navigating the 2025 tax season for U.S. expats. And look, it's kind of an exciting time of year. This is for us. This is when we really pick up because we do a lot of expat returns. So this is really the tax season as it's going again. A lot of people are forgetting. Americans are kind of forgetting about their tax season, but homeland Americans certainly are not. And we're also going to be talking about some of the updates of tax policy. We're going to go through some of that. We're going to be talking about the updates to really some of the hidden costs of citizenship. We're going to have some of that going on, and we're going to finish up with a live Q&A for things going on. And so we'll give you some links. And so we're going to get going with that. So with that, I want to introduce our guest, the wonderful, the great John Richardson. Welcome, John. John will get, and then also with us, the formidable Keith Redmond. Keith, thanks so much for joining us today. So we're getting into it. A longtime guest, if this is the first time you're watching, and we are live on X where we should be. So we haven't been doing that in a while. So I do expect to get some additional viewers as we go on. So let's see here. So let's start with the 2025 tax season. Here it is. We have it going on. What are the common things? Now, look, we often get in to the very detailed issues, but hey, look, somebody could be watching this video for the first time and wondering, hey, what's this all about? So, Keith, you want to just generally tell us some of the few pressure points that U.S. expats overseas can have, not everybody, but can have. Can you just go over those tax filing pressure points that might be keeping people up at night?
Well, I think, probably I'm a little bit different than you guys when people come to you, because when people come to me, it's more like mapping out a strategy, number one. Number two, it's a question of, wow, should I be entering the U.S. tax system or not? Should I be doing the streamline program or not?
Keith, wait. Keith, what's this all about? Why aren't they just filing their taxes? What are you talking about all of this stuff? Why aren't they just...
It's interesting because every person I talk to has their own particular nuance with the situation.
Yeah.
But there's a lot of people who come to me who, for whatever reason, have never filed whatsoever or haven't filed in 10, 15, 20, 25, 30 years.
Yeah.
And wondering, what strategy should they take a look at? And I have people coming to me, okay, I think I need to contemplate renouncing U.S. citizenship. Is that a good idea based on my profile and circumstances or not? Should I wait? Should I do it now? And basically, we just outlined the different options and put together a short-term and long-term strategy. So it really runs the gamut. But I do find around this time it tends to heat up because, as you know, for Americans overseas, June 15th is a big day because that's their April 15th. That's their
April 15th, right?
So it gets people thinking.
So you might just heard a lot if you're new to this, because this is the thing that gets people by surprise. If you go overseas, why do you need to file taxes? So the first surprise is that we have something, and this is really what Keith's Facebook page is on. If you notice, it says residency-based taxation. That's the thing that would help U.S. expats because the United States of America is effectively the only country in the world that taxes its citizens on their worldwide income, and this is the trap. And then really, and this is sort of the untold story of this, is that so many American expatriates are married to non-U.S. spouses.
Right. And if I may interject, I'm sorry, Anthony, if I may interject, because you did say something that was critical. You said if you go overseas, keep in mind there are a lot of Americans who have never lived in the United States ever in their life.
Oh, right.
Yeah. So that's a bucket of people as well.
That's right. We have those too. So those are generally the things that are going on. And then so Keith, and then you talk to people. So I mean, what are the things causing anxiety the most, would you say?
I think the things that cause anxiety is finding out that they're technically supposed to be filing U.S. tax returns and what they should do or not do, number one. And like I just said before, anxiety. Should I give up my U.S. citizenship or not? Also, anxiety, which I get, or people who have not been in the tax system for a while or ever, and they're going to be coming up on an inheritance from the United States that could very well be a taxable event. What should they do? What should they not do? And depending on the situation, sometimes I refer them to you or John, or not at all. It just depends. But it does create a lot of anxiety within the family.
Indeed, yeah. I mean, the amount of stress this causes, and I think
I'm sorry, yeah. And I forgot. Also, for kids, people are worried about their kids where they have bestowed U.S. citizenship upon them, and now they're worried.
Well, that brings me to a topic that we have done, and I'll get to John on this one. Thank you very much, Keith. Is that the family who renounces together stays together? John, good morning to you. How you doing, my friend? So it is quite a stew that Americans abroad can find themselves into. And I think the problem is this, is that, we've talked about this, is that when you file something to get into compliance, make sure that that doesn't cause more problems that it solves. That's kind of the thing. And like a lot, and this is what we've been seeing. A lot of people have been coming into compliance with the streamlined disclosure period program, and then didn't realize they kind of needed to file every year afterwards.
Absolutely. They forget that part.
Right. And I think this is where we get this is really where I would say a pretty good discussion point is what's that advice to somebody to say, okay, hey, Keith, I haven't been in compliance in years. And I'm really worried about, bad things happening to me. So what should I do? Now, do you tell people like, well, hey, look, if you do this, you got to do it every year. Otherwise, you might put yourself in a worse position. Do you tell people that?
I do. And sometimes I use the favorite phrase that John says to me is, it depends.
Yeah.
It depends on your profile and circumstances. What are you trying to do? What is your goal?
Yeah. Now I want to exactly. All right. So John, what should people be, if they're not in compliance, what should they be looking for in a tax professional?
Well, I think the first step is to understand the different, kinds of tax professionals, right? One would be, I would call, the straight tax preparer, whether they're a CPA or not, they're just filing taxes. I don't know that I would necessarily start with that kind of person because, basically, you ask about filing and, you're going to get an answer to file. I honestly think the first step is to figure out what their situation is in relation to the U.S. tax system. What are their income streams, their assets. And I think the first step is to understand what a U.S. tax return would actually look like for them. Because, there are different ways of filing. There are inconsistent views on, what forms are required, et cetera, et cetera. So that would be the first step. The worst thing you would do, in my judgment, is just, go online, find a tax preparer and call up and say, hi, I want you to help me file taxes.
That really could be because, and I think, John, your point is that, it's like your regular tax preparers could be the one who got you in this trouble to begin with. Sometimes they didn't know a whole bunch of filing. Maybe they filed. They didn't know the intricacies of what would be required.
Well, but Anthony, I mean, that would include that, but it's far more than that, right? Because, I mean, let's say that you're in a place like the UK, running a small business corporation, right? The question is, how do you want to treat that on a U.S. tax return? Do you want to treat it as a corporation, disregard it? And, it goes on and on and on. So, I mean, just to keep this real simple, okay, I think that the first thing people need to understand is their situation in relation to the U.S. tax system and what a tax return would look like, okay, for them. And, what options there might be. I mean, many people have the option of the foreign earned income exclusion, foreign tax credits. Married filing separately, married single, that can have implications of whether they're required to other forms. The threshold is higher if you're married filing jointly on Form 8938, for example. So I think that's actually the first step here. Not, once you get some concept of what you think filing actually means, then I think at that point you engage somebody to help you with that if that's what you want. And at that point also, you talk about, well, what does it mean to file a tax return? Well, there are various options for how to get returns in the system as well, right? I know Keith is always talking about streamlined. I mean,
That's not the only option. Yeah.
It's not, no.
one option. I think it's streamlined is far overused as a word. It's simply a mechanism to get returns in the system. And I think that on that issue, I think that, a very important question is what exactly is the penalty exposure? Because if the penalty exposure is not significant or perhaps even non-existent, why would you get to something, that is going to require you to write a love letter to the IRS, right?
Well, John, and I just want to hit on a couple of things you're saying here is that, so a few things that, as a U.S. expat, you are, with assets and a life overseas. And that's really who we're talking about. If you're just temporarily overseas or retired and you don't have a financial center of gravity overseas, these issues don't affect you. But if you do, this is like, so here's sort of your problems is like, okay, you're not doing it and you have a penalty exposure. Okay, well, how to do it? Well, what you will find, and this is what you will find, is the incredibly vague and inconsistent tax treatments. And I'll just talk about one of my personal favorites, the PFIC regime. If you go on U.S. Various groups on Facebook, all the tax experts, every single one of them will repeat that a foreign ownership, an investment in a foreign mutual fund is automatically a passive foreign investment company. We've discussed this on this channel at length. And, I've actually gone through a PFIC audit, and that's not what a PFIC is. A PFIC requires a company to be owned. The company's stock has to be given to you. If you're not given stock, it's difficult to say that's a PFIC. And if you look online, if you look at the instructions for 8621, you will not find foreign mutual fund. You will not find ETF there whatsoever. We've gone through the timeline, and it really doesn't make sense that the 1986 law would actually attempt to regulate foreign mutual funds as they weren't really a significant thing. Rather, the law was intended to make managing money overseas for U.S. persons a bad thing, to keep that money inside. That was the real intent of the law as far as we can tell. So where to go? And now this is the problem when you have, because if you elect a PFIC treatment, which may or may not be wrong, you could have a penalty exposure. But if you say, you know what, actually, I'm not going to, it's not a PFIC and there's no penalty for it, then you might be better off. And that's the thing. You might be better off not following, in many cases, the tax industry wisdom, which oftentimes they can't find any sources for it. Anytime I ask them, I said, hey, just show me the source on irs.gov that says of ownership in a foreign mutual fund is a PFIC. Just show me that, please, once, and no one can. And I've only found one instance of PFIC and foreign mutual fund being on the same document. It wasn't a relevant issue, and they weren't deciding whether or not that was not the issue that was being decided. So that's sort of the challenge that people have is well, which treatment is the right one? I hear different things.
No, Anthony.
Right.
No.
Go ahead, John.
That's not the right question.
What's the right question?
With respect to everybody, which treatment is the right, wrong? Which treatment is defensible is what you want.
Ooh, yeah.
Okay, because look, here's the reality, okay? Right. And I have the luxury of saying these things because I'm not a tax preparer, okay? But the reality is there's not a lot of wisdom in the tax preparation industry at all. They don't read the internal revenue code. Some do, but most of them don't. They don't read the regs, et cetera. They don't think things through. I mean, the way they operate is primarily, just how everybody else operates. And it gets worse because, after a while, they end up sort of creating the law because of enough people behave in a certain way, they create an expectation, right?
Yep.
Another problem with the tax preparation industry, and this is a natural consequence of who they are. So, this is an observation, okay, not so much a criticism, but I think it's a legitimate observation. is that they see this from a completely U.S. centric point of view. Okay, completely U.S. centric because they're U.S. Tax preparers. They don't do a good job of asking what does this really mean in the context of the country. They're not very good at trying to slice and dice treaties, etc. And because of the the abusive nature of the whole system, including the abuse, the threats of abuse to tax preparers, make no mistake about it, if it comes down to a question of protecting themselves or protecting you, they're going to protect themselves all day, every day.
All day, every day. 100% true. There you go. Thank you, John.
I actually think, to add to this, that for people who are, I know this won't be popular, but whatever.
All right.
For people who have relatively simple situations, I think the best investment they could make is to figure out how to do their tax returns themselves.
Right. Here's a question for both of you, John and Anthony. I know the answer to this question, but I want to put it out there for the audience. So I get a lot of people coming my way asking me, is it possible to secure a U.S. tax compliance professional, albeit being a CPA or a tax attorney like you are, Anthony, and to just have them do how do I put this, an estimated tax return to get an idea of what the damage may be before they actually formally ask you, Anthony or John, to go through with the whole enchilada, if you will. Does that make sense, my question?
Absolutely, Keith. And here, it's as if you were asking me for a plug. Yeah, no, that's exactly what we do. And I think that's one of the differences between, my firm, and I know with the way John is, and, really some of the better ones, is that this is unfortunately the reality of the situation. I'm not going to get into names, but there are many tax attorneys, tax professionals who prey upon ignorance and will do terrible things to their clients. Namely, it would go something like this. You hire them to say, oh yeah, I need to do a streamlined disclosure. And then they send you a draft return showing an obnoxious amount of tax due and a huge penalty. And you ask, well, come on, this seems a little much. Isn't there a way to lower this? And they say, absolutely not. It's like, well, look, I want to go get a second opinion and go somewhere else. It's like, well, if you do that, there's an implied threat that they'll report you to the IRS. That's actually been reported to me several times.
Yeah, I get that as well. Yeah.
So you hear that? Yeah.
Really?
Yep.
Yeah.
Yep.
I think that anybody does that, some kind of a professional complaint ought to be lodged against them. That's so outrageous.
The thing is that when you're the expat in ignorance, that you don't feel like you're in a position, you don't want your name anywhere. So it's one of those things that it is a crime that goes on, and it's unreported, and it's devastating, and how humiliating this all is. And that, I think, John, your point is, if you really do want to protect yourself, learning how to do your own tax return is probably the best thing you can possibly do. Hey, look, we do things, like we do tax, preparation, but you need to know what you're actually signing. You really do. And you're just trusting this some person blindly, and you're signing onto what you can't possibly understand. So, or you could, but you got to take the time. And just how vulnerable you are if you don't know what exactly is going on. Now, we've included a lot of stuff on our channel for a lot of the various forms on how to understand them, so you can understand them. Again, I get it. I mean, unfortunately, I think about 40 hours, right, of our content. Right. Unfortunately, that's the problem.
But Anthony, let me ask you
ahead,
this. Is the American overseas less vulnerable when they sign on the dotted line if they use a tax attorney versus a garden variety CPA? Because there's a little bit more protection.
Well, I would say yes and no, but sometimes it's these attorneys who betray their own clients. So I've seen it's CPA, it's anyone in the industry is going to say, you're going to do it my way or no way at all. And if it's no way at all, I'm going to report you to the IRS.
Well, so that cannot be a majority of, I mean, I don't doubt that exists, but I find it hard to believe it's a majority of people out there.
I mean, I run into it a bit.
Are they really that morally depraved?
I did see, and yes, I'm gonna, based on the things that I have seen and how terrible the lack of, and this is really what this is the thing that drives me nuts, is that these people will charge an arm and a leg to do work, and they won't take one position of advocacy. And John, to your point, you're absolutely right, and thank you for correcting me. It's not whether the tax treatment is right or wrong, it's whether it's defensible. That's such an important hinge point of the person that you're going to use for you. Is it someone who's going to look for things that advantage you, or is it somebody who's going to say, hey, look, I don't want to put my neck here at all. I don't even want to deal with an IRS letter. I can't handle that. So you're going to pay me a lot of money to do basically just fill in the forms the way that we're inventing this, because a lot of times it's not even based in law. So John, It does happen a bit, and Keith knows more than I do, I think, on this.
So Anthony,
let me
go ahead, John.
Add to Anthony's answer. You were asking about, does it make a difference, if you go to a garden variety tax preparer or a lawyer or whatever.
Yeah.
Here's one way it definitely can make a difference, is if you get penalties and reasonable cause letters, okay? Because part of reasonable cause is, well, we can go on and on, but I mean, generally speaking, if you can show that you sought out a person because of the expertise they were representing in a certain area, and the person gave you such and such advice, okay, that's a point in your favor in writing successful, reasonable cause.
Okay.
Very difficult to, if you go to just, anybody, right, who's a tax preparer who doesn't hold themselves out, in fact, obviously doesn't have any particular expertise, you're not going to be able to rely on that person's advice on a reasonable cause situation.
Okay. Thanks, John. And that is true. That the reason, not always, because you're still responsible. And then they say, well, you should have sought a better professional. We've run into that too. It's like, well, after the third one, and we actually did have a case where it took us multiple times, and our client sought out, went to brother who was a business attorney in Boston, who said, oh, you're fine. Then he went and sought out a tax professional in Switzerland who said, no, you're fine. And then no, they were totally unfiled. They had a whole bunch of penalty exposure, and so we went for reasonable cause. And it was just hilarious. The IRS is like, well, you could have got a third, like the person should have known to get a third opinion to look for the thing that they don't know to look for. You should have been looking for the expert and the thing you didn't know you were an expert in to look for the expert. That's
I agree that is a problem.
That's true.
That's a problem, but this is like written right into the law of reasonable cause. Yeah. Okay, so there's no question about this, that a point in your favor in getting reasonable cause abatement is, who was it who advised you? Okay, and what did they say?
That's it. Now, I just want to get James' comment right here. Issues everyone told is the best interest to be compliant, and I'm not going to comment on that because I'm a tax professional. So I just want to get Keith. What do you say about that?
No. From my point of view and in my world dealing with people, that's not always in one's best interest to be compliant. It depends on the person's particular profile and situation. Yes, there are many instances where it's best to be compliant, but as well as there are many instances where it's best to not. It just depends. So one can't there's no cookie cutter approach or answer across the board.
Yeah, no, and I think, and that just sets up what I'm sort of bound by. I cannot tell someone.
Right.
So the answer you will always get from me is to be in compliance. And that's really what you're looking, that's what I have to do. I can't say, oh, in your case, don't worry about it. Oh God, no,
you can't do that. But let's say, Anthony, and I'm sure this has happened to you, an American overseas comes to you and says, I'd like you to do a tax return for me so I can see what the damage looks like as far as my exposure.
That's a very smart move.
I'm going to, okay. And then at that point, the American overseas says to you, Anthony, thank you very much. here's payment for your services.
Yep.
I'm going to have a think about it, and they go away. That's the
Yep.
end. You don't turn them in. They're up to them to decide what they want to do.
And it makes
Correct?
sense because there's so many various treatments, like you might, because I think that makes sense to me when someone, hey, and that
Right.
happens. We do
Well,
that.
remember the guy
People,
that
we
I
do
turned
that.
you on-
We say,
remember
here's
the-
what it's going to be.
Right. Remember the guy I turned you on to, who will remain nameless, he was over in the UAE, I'll say, and he had like $100,000 tax debt. And I turned him on to you, and you said no. And he got a second opinion from you, and everything worked out fine where he didn't owe any money. So that's why it's always good to get a second opinion.
That was more than that. It was a lot.
Right.
More.
Right.
Yeah,
There's more to it, but just
that
speaking.
that tax bill was like a lot more. But no,
I'm just using that figure.
We're just but that was right. Yeah, that was a great example, Keith, of someone just and and I found when that case in particular that you're talking about, I remember I was looking at the attorney's streamlined disclosure, and I was like, wow, this attorney is bending over backwards to find a penalty exposure, mixing and matching different tax treatments to ensure the worst possible outcome. And so that was really something. And client had no way of knowing what was going on. And so, yeah, that was a nice one. That was really nice. That really helped out that family. That was a great case. And thank you for that, Keith. But yeah, that's exactly right. And just get it done. And there's nothing wrong with getting an opinion. Say, okay, what's your tax rate and why? And why is it defensible? And that's really appreciate that, John. All right. So we have, all right. So now, you know what I want to get to now, is I want to get to, unless there's anything on this that we need to cover, because I want to get on to the RBT advocacy updates, where we are with everything. Anything more on this, on the challenges here? Let's see if we can get some advocacy, maybe change the law, change the regulations, change something. So that
Anthony,
go
ahead.
At
this time of year, this is the time of year that it's really it's a celebration of American citizenship. It's what it's all about. I mean, it's a virtual form fest. I mean, Americans all around the world run around celebrating their citizenship, proudly holding up the forms they must file and saying, "This is proof that our citizenship is worth something, and this is proof that American citizenship is better than all the other citizenships in the world. No other citizens are even worth taxing.
They're not even worth, terrorizing, right?
Exactly.
There's so much to celebrate about being an American, aren't there? Yeah. Let's talk about, talking about what to celebrate. I don't know where everyone else is, because we're going to get, we try to steer away out of regular politics because just endless discussions and blaming back and forth. Where I basically am is, look, guys, it's one team against us. So, that's kind of where we are. They all have an interest in keeping the system going. When you really understand what it is. So I'm not really looking at anyone necessarily as our savior. Sometimes the fix comes and it's much, much worse than what the reality is. And I'm not even sure what's exactly real. And I've mentioned this to a lot of my friends. I used to watch professional wrestling back in the day when people thought it was real. And, one of the highlights of my life, I think, was with watching Hulk Hogan devastate the Iron Sheik and claiming back the heavyweight title. I think that was in December of 1982. No, it was January of 83, I think. And I remember feeling the pride of being an American. And, I was thinking even before that, when it was the political season, I'm like, this all seems like professional wrestling, because you build up your heel to build up your hero. Both sides have their heels. Both sides have their heroes. It seems very contrived and manipulated. And then Hulk Hogan hulked out at the Republican National Committee. So where I'm at, I don't really necessarily take a lot of this stuff too seriously. It does seem rather contrived, and I'm not sure exactly what to believe. So with that preface, I'm willing to talk about politics. I think let's talk about Darren LaHood's bill. That's probably the most important one to discuss. I'm on, let me get over Americans overseas here. Okay, so here we are. We have Representative Darren LaHood. So now I'll just say we had Solomon Yu from Republicans Overseas on the channel. And, he's, Donald Trump made it a campaign promise. He made it an explicit campaign promise to end double taxation for Americans overseas, which is inherently a residency-based taxation, I would assume. And it's something where we've talked about how Donald Trump can do it entirely through regulation because the law is written so terribly and the regulations fill in most of the law. So we had Darren LaHood, who I've been a little suspicious of because he wasn't part of our movement. So, and his biggest donor a little over the last 10 years is Ernst & Young, and very few firms have made more money off of FATCA than Ernst & Young. But here it is, and it seems like the only game in town right now. Donald Trump has gone a little bit silent about his campaign promise, which isn't really a nice thing to do. Here we are, April. It doesn't really seem quite serious what he's doing. We have Darren LaHood's bill, but, John, how serious do you think this bill is being considered?
Well, how would I know? First of all, I would not infer from Solomon Yu's silence that there's nothing going on that front. Okay. I would not infer that necessarily.
Well, I hope not. I mean, yeah, that's true.
But I don't know anything at this point more about the LaHood bill than you do or anybody else. I mean, what I do know is that they haven't introduced a new version of it in the current Congress. My impression is that that they've got to do something fairly soon for it to be included as part of what the president would call the big beautiful bill, right?
Yeah.
For tax reform, yeah.
Yeah, I mean, I think it's going to be to the extent that it's not in that. I think it's probably going to be harder to get it through. What I find interesting about it is that, as far as I'm aware, there's not a single Democrat who's supporting it.
Well, that's kind of where I get to this. And I was looking here and, apparently I go here, how to pass residency-based taxation. Okay. So Democrats abroad, they're claiming to, though, it seems, but they're not, John. Oh, I think you're muted, but hang on. Yeah,
Democrats Abroad tax group, Rebecca Lammers and that are they're sincere in what they're doing. There's no question about it. I mean, the Achilles weakness is of Democrats Abroad tax group is that it's part of Democrats Abroad.
Right. Okay, so Democrats are all right. So that helps clarify what's going on.
And I think the other weakness is, what do they define as residency-based taxation? Because that term is thrown around left and right, and many times it's not residency-based taxation, and that's a problem. Yes,
the only people or group who clearly have supported residency-based taxation would be SEAT, and the Republicans Overseas Tax Committee, right? Both of whom, as a complete severance, completely severing citizenship from tax residency. Now,
exactly, everything else is not RBT. Full stop.
Well, I would agree with you. I would agree with you on that. I think that's true. I think that's technically true. I think it is true. But the people who are not, committed to, how can I put this? In fairness, they see a possible solution that would not involve severing citizenship from tax residency, right? In other words, their solution would be, some kind of a carve out, right, for Americans abroad that they can opt into, that they can be spared, the technical application of citizenship-based taxation and be treated generally as non-resident aliens. And I would agree that that would be helpful to Americans abroad generally, most Americans abroad. There's no question about that. But I do think it's important to understand that they are not advocating for RBT. Okay.
Correct.
That's my only point. I'm not saying this stuff's not helpful. I'm saying they're not advocating for RBT.
It's something else, right? And I think anytime you try the something else, it doesn't quite work because, there's only one way to simplify the code, and that's to make it smaller. Adding things never simplifies.
Right.
Carve-outs and exception are
Right.
the opposite of simplification.
Right.
Opposite. They're the opposite.
Well, let me be a devil's advocate. This is not my position, but let me be a devil's advocate because I hear this all the time. Is that okay? It's not RBT, but it's a step in the right direction. So if we get this, then we can get more down the road, and then we can get more down the road, and then finally we'll get RBT. That's what I hear quite a bit.
All right. I don't know. Yeah, I mean, that just seems like denial of reality, but hey, right? Wishful thinking. All right, maybe. Hey, I'm not sure about that.
I think
and one thing, and I think this is probably one of the, and we didn't really address this because this is one of the bigger issues that we have with all of this is the treatment of foreign pensions, tax advantage foreign pensions. Didn't mention this, but that's one of the biggest, most insane thing going on, and a huge pain point for. I mean, because you're looking at. It's like, okay, you might have a massive penalty exposure for something in the country in which you're working in has decided to carve out as something to give you a tax advantage for your own retirement. But that's where the IRS can swoop in to say, oh, actually, then the tax industry could do this too. They'll take a position that, okay, sure, it's defensible that it's taxable, but there's also a defensible position that it's not taxable. But they'll lean always like, okay, this is going to be taxable. And because what? There is no foreign tax credit to apply. Because why? Because there are no foreign tax credit. There's no foreign taxes. And there's no foreign earned income exclusion to apply because it's not earned income. So there's just those huge problems that we get with pensions, and they're ongoing. And, well, that's exactly. Well, here we go, James. Thank you very much. Yeah, and and this is where it comes down to selecting your representative. Is your representative comfortable taking a treaty position that your foreign pension is actually part of that country's public pension system and Social Security, thus exempt from taxation pursuant to the treaty? Are they going to be, or they're just going to say, "Oh, I don't know about that"? Everyone else says it's taxable. Go ahead, John.
Do you remember we did a while back a session on the superannuation where I argued that it could be treated as Social Security?
Oh, absolutely. Yeah.
So interestingly, somebody put that video up on it was one of the Australian sites, and I was watching the comments to it, and many of them were really, really uneasy about it. And I think I look at this. I mean, my disdain for these people is increasing, and I'm going to be open about it, right? Somebody tries to help them, and oh no. I mean, this is what you want. Go for it. Rest your life. Go ahead. Be my guest. But that's what you're doing. All right. And the craziness of this is the IRS has not, will not, and is not expected to take any position at all on the Australian superannuation. No. It is completely dealer's choice.
No, and we talked about earlier this year that they were given, they're given opportunities to clarify, and they know exactly what the issue is, and they're pretending like they don't know. They've known this.
So I mean, you've got all these people. You got all these people who say, "Oh no, oh God, that's too radical for me." It's as though there's something in the American psyche, okay, that is really, I mean, they just are so ruled by, U.S. law, IRS, etc. I mean, they will never be free unless they renounce U.S. citizenship. They can't, okay?
I think that's part of our Americanness,
it is.
John. It's really that the internalization of the Internal Revenue Service into our very thinking and all the time. And like, okay, the taxes are like, yep, we're going to use taxes to set social policy. We're always going to use tax for everything. We're going to think about tax about everything. And that's the problem, is that egocentric Americanism is really the trap. It's like, and I think they know that. I think the government, like, yeah, you know what? You're an American. You're just so afraid of us, and you're so intimidated on purpose because we want you to be, because we enjoy this. So they will refuse to take, in my mind, when I look at it, because we'll do it. And by the way, we'll take a treaty position on Australian superannuation, of course. But guess what? Not all of our clients say, Anthony, I'm not comfortable with that. I'm like, okay, all right. Well, I'm not going to be able to convince you. We'll do it either way. But I'm just telling you, if you want to take a treaty position, we can. The question I ask people is, okay, I'm not an Australian attorney. Do you think you can get an opinion from an Australian attorney that the Australia superannuation is a part of its public pension and social security program? And every single time, like, oh, of course I could.
Mhm.
Then I'm like, well, why wouldn't so Australia's interpretation of law doesn't that's the egocentric Americanism. Like Australia doesn't have an interpretation of their own law. It's only Americans who can decide it.
Yeah.
That's again, that is not the issue. Okay. Well, we've been over this and over this. And by the way, everybody's hearing this for the first time. No, this is not the same as, the thing advocated by Mr. Castro a few years ago. But that was a different argument.
Right.
Okay. This is, more of a treaty-based thing. But the problem, the real impediment to change is individual Americans. They love their tax system. They claim they don't, but they do. And they do everything they can to keep it going.
Well, I think it's more of the Stockholm syndrome. That's what I'm going to.
But look at the difficulty that this tax, what is it, something, the group behind the LaHood bill. Look at how difficult it is for them to fundraise. At some point you've got to start asking the question. Do Americans abroad really want to get rid of citizenship taxation? You really got to ask the question.
I know you do wonder. You do wonder, yeah. It seems like something that could end if people wanted it to end.
Of course, it could end. No problem. Okay.
If the people affected
they
by
wanted it to end.
Right. Obviously, like, look, it's going to be difficult to get, Homeland Americans all hepped up about it. But if the people impacted by this, if U.S. expats wanted to change this, they certainly could. Certainly could. But
I think they could, and I think that part of the problem is that they rely on groups, right? Like
who steer them the way, right? They're like, oh no, we'll steer the RBT over this way. Our definition of RBT, right?
They're clearly they're clearly in overdrive, perpetuating the system. Okay, no question about it.
I think you're right about that.
Why do we have citizenship taxation? You can have one answer. Well, it's tradition. Why does it continue? Because individual Americans abroad want to continue it. Or they don't want to end it. Maybe let's be a little more clear. They don't want to end it.
Yeah. All right. Well, let's move on. Well, some people do want to end it. So let's get to those people. Those people renouncing their citizenship. And I do see that the renunciations did spike up there. And that the actual amount of renunciations is higher than reported. And who was that? That was our good friend Parvez, who keyed us onto that one. So we have a lot of people renouncing, and I don't know if it's. And I'll just say this. Look, I think it's a lot of people. The clients who are hiring us tend to be not the fans of Donald Trump right now to renounce, because the thing is that because CBT and FATCA wouldn't be the cause of the increase in renunciations because they've been around since 2011. So I do think, and that's what I'm hearing from the clients who are hiring us, is that they're afraid of Donald Trump.
And they're afraid of any changes to the renunciation process, like the fee going up, or maybe the rules will change or something like that. That's what I get. That people are just going to bite the bullet now and do it because they're afraid something might change.
Go ahead, John.
So much of this is habitual thinking. The vast majority of these people can live just fine without U.S. citizenship, but they can't live just fine with it. So you really have to ask yourself, for many of these people, let's say the U.S. adopted RBT. Would it really make a difference in their lives? They'd still be living where they are, et cetera. And U.S. that renunciation, which I don't know that we really talked about on this channel, but renunciation of citizenship is actually an important estate planning tool for American citizens.
Yeah.
Well, look at it this way, Anthony. On even the most basic level, right? They can get out and pay an exit tax based on capital gains. That's far less than the estate tax, isn't it? If they die as being Americans.
Wow. Yeah, I didn't think about that, but yeah,
No, there's no question that the renunciation of U.S. citizenship, not for everybody,
right,
but for a
exactly.
lot of people, is a very, very legitimate, and I think somewhat overlooked estate planning measure. I mean, I think that I don't know. I mean, it's again, it's always the complexity of the thing. But why, for example, would somebody like Tina Turner have renounced U.S. citizenship in 2011? It was after the current 877A rules.
I always thought her renunciation was very, and she moved to Switzerland. And
Well,
Well, she
lived in
married a Swiss
Switzerland.
guy. She married a Swiss.
oh, okay, that wasn't. Yeah, I think her renunciation was really an interesting one. And I just kind of wondered, like, what's the backstory?
Well, she married a Swiss
I
guy,
don't know
so
what
I'm
the
sure that's part
backstory
of it.
is.
What's
I don't
that?
know I don't know what the backstory is, quite obviously.
Okay.
However, I mean, let's just look at this from the point of view of U.S. laws for a moment. Okay. I mean, for a lot of people, the potential of a estate tax can be far greater than the derealization tax on renunciation, right?
Well, that's why you got to run the numbers, right? I mean, that's kind of
Well,
what the numbers
40% compared to 23.8%.
Yeah. Yeah.
And also, and don't forget, the 40% is based on the valuation of the asset, not the gain, right? So,
Oh, yeah, right. Yeah.
So, I mean, no, I would agree that we're talking about, a relatively small number of people here who have that kind of money. But, I'm inclined to think, I would presumptively think that, that her renunciation probably was a business decision based on, future tax liabilities.
All right. And she wanted to live in Switzerland as well, so
But guys, also,
Well, she
I think
was
it was
living in Switzerland.
yeah, right.
it was a business decision, but it was also probably a marriage decision as
Yeah.
well.
Right. Right, Keith. That's probably the most obvious thing. Maybe that's just the back. That's probably the simplest thing, because
Very well be.
her husband got really good advice. That's why. Okay,
Well,
no. It could have been that. Yeah.
I mean, I don't know. Again, of course, when analyzing this, you have to understand, what's happening in Switzerland. I don't know the, tax law wise. I mean, and I don't know the answer, but I mean, obviously, part of the consideration is always U.S. tax laws, and there's no question that for a lot of people, the estate tax can be far worse than.
They can be, and there's also, and I mean, and I would say too, there's planning opportunities for both estate taxes, and you also have to be aware of this trap. Makes me think of it because, okay, let's say that you grow up in America and your parents are American, and you inherit an apartment building in say Beverly Hills. Let's just go with Beverly Hills, right? You would inherit an apartment building in Beverly Hills, and you then decide to say, or actually, you didn't inherit it yet, but you might, and you're pretty sure you're gonna. You move overseas. You renounce your citizenship, so it's not something in part of your estate that that you have to pay taxes on because it's not yours yet. You renounce your U.S. citizenship, and now you and your 3 siblings all inherit a share in this apartment building in Beverly Hills. Well, now you have a huge problem that you don't know about. You're a non-U.S. person with U.S. situs assets that are in your name. You're going to have an estate tax with an exemption that is only $60,000. So you have to watch it when you're not a U.S. person investing in U.S. assets. And it's really, really key. And I think that's one thing that a lot of times, Keith, that we have, I might talk to, say, a U.S., the wife is U.S. and so let's just say husband's UK.
Right.
And then the husband owns something in the United States. And I'm trying to tell, like, wait, you have a much bigger problem than your wife does. What do you mean? And they're like, oh my God. So that's always something that comes up too. So whenever you're investing, and so if you are an American and your spouse is investing something in the U.S., they're gonna want to make sure they do some planning because you could have a real big problem on your hands for that one. So yeah, that's kind of funny. You escape one thing, but then you could actually end up with a worse problem.
Worse
'cause
situation.
That's the part of being an American, and that's what makes us so exceptional, right?
Well, that's why, when you get to the whole, renunciation thing, I mean, the first or second question you would ask is, what is your financial relationship to the United States, right?
Yep.
Right.
Because, I mean, there are plenty of people out there who are much better off retaining American citizenship and then renouncing precisely for that reason, right?
Yeah.
But I mean, it's all over the place, and it's not, it's not the type of thing that you can expect to pay $500 for advice on or something, okay? Because there's a lot of moving parts. I mean, it's an expensive project, for people to hire the right people to do this.
Yeah, and everybody's situation is different.
Yep. All right, guys, I do want to get to our live Q&A, and I had some questions we couldn't get to a few times. They've been building up, so I have some questions, and if you have questions now too, put them in the comments. Unfortunately, I don't think if you're watching on Twitter, I don't think I can respond there to comments going on there. So if you're on YouTube, I could respond and get those up here. So look for that link if you're not on YouTube. So one of the questions we have is, I missed FBAR filings for 3 years. What's my best option? Right, and there's the.
It depends.
Yeah, right. I mean, that's the thing. That's always going to be. It depends. There's so much
more
to it.
information is needed.
Yeah. I mean, that's the thing, and I think that's what I see often on because I'm on Facebook, and I look at the U.S. expat tax questions, and and I think this is the comment. This is what I see all the time. Someone looking like I filed an FBAR for myself, but my LLC didn't file an FBAR. Should my LLC file the FBAR too? And this is the thing is it's like, wait a second, you're not looking at what's actually required. Everyone assumes way too much compliance is required, and usually most tax professionals are answering with way too many, much too much, and that people don't again look at the penalty exposure. What's the penalty exposure if you do file this form? That is the thing you need to ask, and that there's forms that you could file to say, hey, look, I want to avoid any penalties, so I'm going to file this form. Then the IRS penalizes you, and they wouldn't have known about you anyway, and that's one of the things you need to balance, and that's the balance. And I think that people get, Keith, I think people get offended that we're like, we want to balance. Like, look, yeah, you might want to avoid that penalty, but really, you're not advising anything criminal. It's like, but look, the problem is this. Sometimes in the attempt to get a compliance, you end up with the result that you were trying to avoid
in the first place. Yeah.
Right. And that's why it is a nuanced, delicate, it's an art form, I would say. It's kind of an art form.
I mean, that's why it's hard to ask a very simple question like that, because as John says, it depends. It depends on the person's profile and circumstances to be able to give some valid, well-informed answer.
Yeah. Here's another comment from James. Thank you so much, James. Yeah, he's just talking about the tax reform. Right, it can't be a standalone, and the only way is to fold it right into upcoming tax reforms. Look, my point was this, and I think the way to get it in, the way to make sure it passes, is to make it a pay-go revenue offset. And I think the way to do that is to say, what is the IRS spending on enforcement of these for what kind of revenue? And of course, and look, at one point, these are ruinous penalties. And we'll say that like, oh my God, these are ruinous penalties. But when you look at actually what's collected, it's not that much. It's this threat that's out there that's scaring everyone. It's not the actual money that's brought in. And then you're forcing Americans spending, $1,000, $2,000 to prepare even more, to prepare an elaborate return that shows no tax due. Well, that can't be good for the IRS. Processing that return is dragging them down. And where are the costs? And so if I was going to want to maximize the chances of this bill passing, it has to be found to be a revenue offset. And of course, with pay-go budgeting, whether or not it actually offsets revenue, it doesn't matter. No one ever looks at that. But in theory, it has to offset revenue. Now, John, do you think there's any way that could be done? Because I mean, we look at the amount. The amount of manpower. I mean, the amount of manpower. The IRS has their highest level staff on these international returns, they can't stand it, by the way. Most of them can't stand it. It's very difficult and mind-numbing work. Wouldn't the IRS like be able to, like if they put their staff more on the fraudulent earned employee retention credits, that might better get them a better ROI than going after people just like you're scaring them with penalties that you're not going to collect, or maybe you will, but eventually that would seem a better way to go about it. And I think the only way, John, what do you think about that?
I think that once revenue neutrality becomes part of the discussion, I think that means it's not going anywhere. I think what needs to happen is that I have no sense at all that the Trump administration's interested in revenue neutrality. I think they're just interested in objectives, and I would just try very, very hard to to get this in, or I think something even simpler.
Okay.
I don't know, but how do you argue that something like this is revenue neutral?
Yeah, that's what I don't understand.
I think you have to introduce the cost of administration or something.
Well, I think the cost of administration are significant, and again,
then you need
and I think, and now James says the House and Ways Committee has already allocated some of the costs. But the IRS puts out the press releases. Look how much we've collected. They've done that. Which they're like, oh, we got $10 billion, which is a drop in the bucket. But when you actually look at what they're saying in penalties and interests, meaning people who they got in a program, so they actually didn't do anything much to get those penalties. They were just people in a program. So that's their big victory. If that's your big victory, then they don't really have much going on.
I think the answer is this: that if it doesn't get reintroduced quickly, I think it's going to be a problem.
Yeah. Okay. I definitely agree with you there.
Otherwise, I think the ship just passed.
Yeah, I think you're right. Yeah, I think you're absolutely right on that. I think we'll let's see here. So I do want to thank everyone for joining us today, and I do see that we definitely had a bigger audience today thanks to Twitter. Looks like so. I appreciate everyone viewing today, watching this. Well, we're going to wrap it up here, and I want to talk about, I guess, what's next. I guess what are we going to do next here? What is next for our? Hold on, let me get this off here. And all right. So now, yeah, go ahead, Keith.
Here's a topic I don't think we have discussed before, and correct me if I'm wrong, because I do get questions on this. Is that I'm an American overseas and I want to start my own business. Would it be best for me to renounce before I start my own business? Or would it be okay to continue having my U.S. citizenship? I know obviously that depends on the person's profile and circumstances, but it is a question that I get quite a bit, that the person is interested in starting their own business, whether it be just them or a larger business where they're going to have some employees. I don't think we've ever discussed that.
No, I love that. Yeah, because I'm going through my mind in situations where it would make sense, and then not every case though.
Right.
So I think we can do that. Yeah. So
just something to put out there.
Some advice on the current. So we'll get to that. Thank you. You're right. We'll have a little business oriented one. All right. So I do want to wrap it up. I want to just give I want to give a thanks to John Richardson. And by the way, let me get John's webpage here. I mean, if you're looking for a source, this is probably the greatest source. Well, maybe irsmedic.com might be equal. May sometimes if you squint hard enough. Could be good, but this is John's site, citizenshipsolutions.ca. Wealth of information. Anything, I got to say, any topic we're discussing, just put it, you could go put down here in your search and you're going to find the really, really thoughtful. And I think that's really, why we all appreciate the great John Richardson so much. The amount of thought that he actually puts into things is just phenomenal, and it shows up in his website. So really, if you're ever lost, confused on something, want some support, go to John's site. Oh, I got the wrong thing. I got the wrong Tryon up here. So go to John's site. And then also, if you are thinking about renouncing and you want to have some of that incredible, thoughtful firepower on your thought, I'm going to suggest that you reach out to John Richardson. Where is his email here? Where is it? Here we go. citizenshipsolutions@protonmail.com. Reach out to John there. If you're thinking about renouncing, and if you have a tricky one. John loves tricky tricky thing. So I'll reach out to him here. And now I also want to give a plug now to the formidable Keith Redmond, and we're going to go back over to his site on American Expats right here. So you want to join here? Look at that, 11,600 members. This is really a support group. This is a great support group. So, and I know we have a lot of people watching from this group. Always appreciate you folks chiming in. So, if you are an American expatriate overseas and you're married to a non-U.S. person, you really want to you really want to be about this. It's really for everybody, but this is really for the lifestyle, and the challenge is unique. And again, putting people first, not necessarily the tax industry. And lastly, oops, I hit on the wrong screen. So if you're in the Wallingford, Connecticut area this Saturday, my band will be playing at the Wallingford Grange. You never know. We'll be playing at the Wallingford Grange. I have a rock trio. We call ourselves Missing Phoenix after Wallingford's most famous missing cat. And it's a rock trio in the style of, say, I don't know, Nirvana.
Yeah.
Something like that. I don't know. Something like that.
If I may interject, Anthony, I'd like to just do another shout out to John. Also, if you're giving up your green card and you need to do formal give up of your green card, he would be a good person to go to.
Absolutely.
And also for me, if you're looking to explore what your real options are, just to reach out.
Yeah, let me get I'll get your email up here, right here.
Yeah.
Where are you here?
If you want to explore what a good strategy would be for yourself.
Right there.
And your family.
All right, so there's keys there. I'll leave that up there as case, because you can't really copy and paste off of a screenshot, can you? So I'll leave that up there so people can type that down if they want. And with that, and then also, and I would say just give a plug for my own firm, Parent and Parents. If it is something you're looking to do a streamlined disclosure, or you just want to run the numbers. You want to run the numbers and just get some advice like, hey, look, what am I really looking at? You want to get a second opinion? We love doing second opinions. And I think it's, what John said earlier, it's like what position is defensible and what position and what are the risks of that position and what one benefits you. Not just blindly doing things because look, I can tell you it's a game of repeater. People are take things I've said and they construe them into things that into absurdities, total absurdities. So, again, if you want to get a second opinion, just go to irishmedic.com. We'd love to help you out. And also, if you need tax prep, we're getting pretty full. I don't know. We're getting pretty full, but we might be able to squeeze you in. We might have to file an extension for you. But either way, you can reach out if you need some tax prep as well. So with that, I do want to thank our fantastic guests, the great John Richardson, the formidable Keith Redmond, and the humble Anthony Parents of Irish. So with that, a fantastic audience today. Thank everyone for joining. Look forward to seeing you next time. Thanks for watching.